Steph, welcome to the show. And it feels overdue that I've got my first Canadian, which is exciting.
Yes, thanks for having me, Fraser.
So I think FinTech is a particularly interesting topic, not just because we're in the business, but because it's, I think, generally considered boring by most people, but it's fascinating to us. And I think the question of how you got involved in this business is always somewhat odd. So I'd love to go back to the beginning when a presumably precocious young student at Queen's made the sort of initial shift into FinTech as a career choice.
Yeah, I mean, I think just to, even before we go back there, maybe just the plug on FinTech for a minute, it's 20 to 25% of GDP globally. It runs, whether or not we like it, it runs, the financial services is the kind of bedrock of and foundation of economics and how the world works. And so it's hard. It's, even if you are basically any other industry, and every other industry intersects with money in the current construct of how the world works. And I have there's lots of different political philosophy around whether or not this is the way that the world should work. But I think every piece of that, even if you don't find it interesting, it's basically impossible to ignore. So if we go way back to graduating college, I graduated and did something a little bit unconventional at the time, but not that unconventional in the auspices of when I graduated, which was I took a year off to go work at a startup that was doing mobile banking services in the developing world. Main use cases were in East Africa. So I spent a gap year essentially like traveling around Ethiopia, Kenya, and Tanzania, a little bit of South Africa in there as well. And that is when I really realized what it was like to not have access to financial services in the way that we do today. I grew up in Toronto. I'm Canadian originally. I was actually born in Malaysia, but the substantial and formative parts of my childhood and adolescence and then college years were all spent in Canada. I did a lot of traveling kind of like in between through Asia, but I never really understood. It's not until you go to the emerging world where you really understand how important financial markets are and how important access to basic financial products are. And I honestly kind of fell into FinTech accidentally. I was looking for an adventure and I kind of found like a whole other world which didn't really make sense to me, where like the financial primitives that exist today that feel like they're almost a right didn't exist. And so I was kind of bit by that bug. Early. Like, I think there are lots of like very specific, pain points that I had definitely as a consumer before that, but it wasn't something that really like, namely international money transfer, like as I traveled or sending money back to my family in Malaysia, like, but it's not until I really lived on the ground in that gig, which was really an accidental job that I got, that I really started to understand just how distorted, I guess, just how like just how different it is in different parts of the world, which feels like a really obvious and trite comment, but like that experience I think really stuck with me.
Presumably also like the sort of relative dysfunction caused by a lack of sort of straightforward, at least in our own view, financial infrastructure. And as I recall, sort of next you ended up at BCG, focused in FIG. Like in the back of your mind was the sort of consumer experience, presumably in places where you were not working at BCG. Did that influence how you thought about working with financial services clients as a consultant, or did you just sort of bookmark that and say, like, I'm going to have to revisit that at some point, but now it's, I have to have a real job?
Yeah. So like two things I think really shaped my experience. At the end of, I was working for a startup. They were doing, as mentioned, kind of text-based mobile banking services. At the end of the time that I was there, the government, one of the government entities that I was working with, basically threatened to expropriate most of the revenue that was coming into the company. I think that gave me my very first taste of what my partners at Portage now like to remind me is just par for the course of emerging markets risk. And it's something that comes up pretty often as we think about fintech being global and about investing in fintechs in LATAM and in other parts of Africa, where I think there's a ton of alpha, a ton of opportunity for all the reasons from the consumer experience first mentioned, but also a lot of risk. It's also shaped by, I know I'm not answering your question, which I will come back to shortly, but and then it's also shaped by a second set of things, which is as my knowledge of financial markets has increased, my general disdain almost for how much the common consumer is really price gouged in an environment, again, where even in an environment like Canada, where we've got a really safe financial sector, the prices that consumers pay for banking, for holding, for investments, for simple banking services, for honestly, for a lot of government protected industries, for telco in Canada as well, I know that's not what we're talking about here, is extremely high. And like the more I learned about this, the higher my level of outrage actually became. And so coming back to your question of like, did I choose financial services? Honestly, not really. Like I have to say that it was accidental at BCG. I think I had it. It's something that, again, because it's 20 to 25% of most economies, if you want to work, if you want gainful work, you want to go where there's work. And there was a lot of work at banks, and there was a lot of work at financial institutions. And I wanted to be in cities. And so that ended up becoming my path. And the more and more I worked for large corporates, the more and more jaded, honestly, I became at the existing financial system and how many people are just honestly super underserved. And as somebody who's generally fairly educated, both about markets, about financial products, I could see it just became super obvious to me that not only was there a huge population of underserved people, but like my knowledge really privileged me to therefore pay the least amount of fees and get the best amount of service. And like that feels completely wrong in a world in which you need to have financial products and you need to use financial products in order to exist in the economy today. And so the idea that like not only would you not have access to them, which was my experience in kind of my first kind of payment startup world, but also that even if you had access to them in a place like Canada, which is about like, and there's amazing, like a million amazing things about having grown up there, but the fact that like it's almost a tax on people who are not educated enough or don't have a certain AUM level. The more and more I learned about that, the more and more I've kind of became outraged about it. But it was like, I think more of but like, did I choose that at BCG as my path? Eventually, yes. But the way I fell into it was more out of the fact that it's literally impossible to not do financial services work if you work. Like, you really have to try.
Yeah.
Like, I would say if you want to work in a city to not work in financial services.
And there's certainly a narrative beginning to evolve here for me, because ultimately kind of going from understanding the, tax, if you will, of these large regulated institutions on normal folks for basic services that they need, you went to sort of creating companies. Did the sort of mission driven focus always, have you gravitate towards consumer businesses? Tell me about, being part of digital ventures and, your experience there and what you learned.
Yeah. And I mean, I'm now starting this pattern where I don't answer your question at all.
That's
and I
okay.
just go on a complete tangent, but
That's okay.
but I would say, like, yes, I would say those experiences have really made me gravitate towards consumer businesses in general, which I still have super strong conviction on, even though most other investors in the market do not today have conviction on consumer fintech. But let's come back to that to answer your question. I think so. The path from BCG was we had like, what's interesting was we had internally, I think, been trying to pitch this idea that we had for a little while, which was there is room to use at this point. In 2014, 2015, we saw the very first set of robos come up. So the Betterments and the Wealthfronts of this world. Wealthsimple was founded in 2015, actually. And we saw this world come up of super low-cost robos, which were consumer-friendly, which allowed people to invest in ETFs for a very low cost. And like, the idea that we had been mulling around incubating was a hybrid robo-advisor, because it became extremely clear from work and research that we had done in the wealth management space that there's a segment of consumers that just is always going to want to speak to a human. And like, it did not, and like, this is an idea that has kind of followed me, by the way, through my investing career at Portage. And I can talk about some of the different investments that I've made along this thesis. But it really, it was super obvious to me that people like my parents, super middle-class people, like immigrants to Canada, were always going to trust a person that they had a relationship with and that they could pick up the phone and call more than they did putting money into a quote-unquote algorithm or like some kind of completely tech-driven robo. And I think, by the way, there's a whole...
Even if it's a name brand, which we've seen at Retirable for sure.
Yes. And like Schwab and Fidelity were also launching robos at this time, Vanguard, etc. And the idea that you could eliminate the human, by the way, for a whole segment of millennials and Gen Zs, I think never having to speak to a human is a huge positive. And I think about that a lot in my own experience as a consumer. There's lots of opportunities. There's lots of places where I'm glad that I can do everything online and I do not want to call a bank to change my password or to move money from one account to another or to get a tax form or a statement. There's things that I never want to talk to a human about. But even for me, there's lots of things where I do actually want to speak to a human. And so DV at the time, Digital Ventures at the time, was incubating a lot, like businesses on the side. And one of those businesses was one of those businesses that was always kind of a seed of a business was this idea of a hybrid advisor. And so, but we were lucky enough to be working with like a handful of large financial services organizations which were all interested in innovation in the customer experience side, in the retail, and in wealth management. And so we were able to essentially co-incubate something with a completely separate team of ours at Digital Ventures, building what would become a hybrid advisor that ended up being the RBC hybrid advisor that exists today, called My Advisor. And so it now is a full kind of channel at the bank, in the wealth division, et cetera. But that thesis, having now spoken with hundreds of different potential customers, is one that, again, I think really stuck with me through my investing career at Portage.
And when you talk about that thesis, do you mean like there's sort of a demographic need for direct human communication, or is it more you always need to have a human in the loop when you talk about certain things, like regardless of the generation?
I think it's changing over time, generation to generation. I think the thesis for me is really simple. My belief personally is that for the vast majority of people, period, and this goes to some of my personal beliefs around community as well, the idea of validating decisions on complicated topics with other trusted people is obvious. So what does that trusted person look like? Does it look like a community of people that you know already? Or does it look like an expert, i.e. an advisor? And I think it can look like both or either. But I think the first iterations of this are all about being able to make sure that you can connect people with some kind of trusted human. And I think the first iterations of like robos, like Wealthsimple, et cetera, like Wealthfront, like Betterment, really just assumed that you could use technology to fill the advice gap without a human in the loop. And my strong belief is the vast majority of people want a human in the loop. Even if they're not contacting that human in the loop often, they want the security of knowing that if they did pick up the phone, they could reach somebody. And I think like even for me, if I think about my experiences with lots of consumer fintech companies, not being able to have a phone number to call somebody if there's an issue is actually a massive deterrent for me personally, even as an elder millennial.
Well, I mean, that's for me, like as a consumer, it's the thing I hate about Amazon the most is when something really silly happens, you can't remedy it. I mean, it is a sort of extremely Lockean assumption that, you can sort of present all the information you want to individuals and they'll just sort of turn over their money and not want any recourse or not want any explanation. It's like you've made some rationalistic decision around, investing all your life savings in an automated way. And I think, you're 100% right that for most people, that's not going to work. When we talk about going from, I think sort of you started a startup, then you're a consultant, now starting companies. I think of that sort of George Soros quote where he talks about going from being a poacher to a game warden. And now, today, I think most people would characterize investors as more poachers than game wardens. So maybe you've gone from being a game warden, starting companies, and now you're going to go invest and sort of be on the other side of the table. How did that transition happen, and how did you think about the platform you wanted to join?
Yeah, and I mean, I joined Portage, but I think we were 4 people at the time. So and again, I like my life is a set of both fortuitous circumstances. You kind of need to be a combination of in the right place at the right time. I joined Portage thinking that we were going to buy a bank. I think like originally, or buy a bank, or like buy some other large financial services company, or start some new financial services conglomerate. So for those of you who don't know the history of Portage, let's go back to 2016 when we were formed. Our original LPs were a set of financial services conglomerates in Canada called Power IGM, which is a large asset management company, and Great West at the time, now called Canada Life, which is a large insurance entity in Canada. They all are majority controlled by a well-known Canadian family called the Desmarais family, based in Quebec. Paul Desmarais III, who's really the founder of Portage, third generation of this family. Their family history and story is really fascinating. And so Paul's grandfather actually started this company. The whole genesis of it is this bus company, actually. Then they kind of diversified into power assets, and now they are the main holdings globally are all in financial services companies. And Paul really came to start Portage because out of this question of like, what do we do about FinTech? And they have all of these large positions in financial services companies that really have, and to the point that we were talking about earlier, who really have not invested in technology or in innovative technology of any sort in decades. And so we've watched kind of different waves of e-commerce, different waves of technology come through different kinds of consumer experiences and kind of revolutionize the rest of the world. And financial services has always been this kind of interesting walled garden which has, up until I would say the last decade, been kind of impervious to change through a combination of like regulatory protection, extremely, like, in your words, like boring and complicated set of systems that the average young person and technologist probably doesn't really care to work within. And so it's been this weird walled garden that started to crumble about a decade ago, I would say. And when people started to realize that the experiences that they were getting from banks and other places just weren't the same as the rest of their lives. And so he was kind of sent to go figure out what to do about FinTech. I intersected that journey relatively early, having had both a mission-driven interest and, at this point, having spent a number of years kind of like trying to launch this FinTech. And then before that, having worked within large financial institutions, I think like he had this larger mission of saying, you know what, we're going to invest in the world's best companies, and then maybe we'll think about acquiring some companies, and maybe you can then go and like the reason I joined the platform was because the vision of the clear underserved, like, again, it comes all back to this thread that I keep pulling on, which is like there was so much opportunity and so little innovation, both in the consumer experience and across the stack, that it felt obvious to me that there was something to do. But at the time that I joined, it was not clear if we were going to become an institutional investing platform, whether or not we were going to continue to invest, or whether or not I would end up working at an insurance company in 3 years' time. I think it's still I think how we evolve, how we continue to evolve. Like, if you had told me 6 years ago when I joined this platform that we would now be 3 billion in AUM at Portage and 13 billion of AUM across Sagard, across 6 different asset classes, I would have I wouldn't have necessarily been surprised, but that was not like, I'm even still kind of, it's still, even for me, jarring, kind of the speed of growth and the way that it's evolved over time. And like what did I base my decision on? It was people at the end of the day. It was like a shared mission alignment around the fact that I believed, and they did, and both Adam and Paul both believed that we could build something better for at least Canadian consumers, if not that, like, the world's global consumer was also underserved in this, like, pretty emergent market where, like, secular knowledge of financial services, for all the reasons described before, is actually valuable. So why did I join? It was the people. Did I predict that this was what it was going to turn into? Absolutely not.
So I think the one thing that's been consistent here is that you don't answer my questions, and two, that there is this sort of like mission alignment, which is important to you. So I think it's probably time to give you free reign on consumer fintech. You and I, we both serve on the board of a consumer fintech company, which we have massive conviction in. I'm probably in the middle ground as far as certainly recognizing or I certainly believe I recognize inherent challenges in building, direct to consumer fintech businesses, which for me are a little bit more problematic than the same ones you get for an enterprise SaaS company. You remain, very convicted around consumer fintech. So, whether it's talking a little bit about some of the opportunities you've seen and executed on, or some of the things that, perhaps others in our business just have wrong. I'm not even going to pose it as a question because you won't answer, but
yeah, it's true.
Just,
I probably won't. Sorry, Fraser. This is going to be the most winding chat that you've had, I'm sure. But look, I have huge conviction around consumer fintech still. I think most investors today are not even looking at it anymore, especially both early stage and late stage investors. There's a variety of different reasons for that. I think there's a variety of different reasons for that, with the exception of crypto, by the way, which are now very clearly the fastest growing category of consumer fintechs, period. And I would argue also that consumer is the fastest growing category of crypto, period. On both sides, I think that's probably the clear exception to the rule. And I can see why the first generation of consumer fintechs has maybe not been, quote unquote, that successful. If you look at the public markets valuations of where things have gone, consumer fintechs have been the hardest hit in terms of multiple compression. And so I can understand if you're a late stage investor or even an earlier stage investor, like the Robinhood announcement, for example, today, and if you look at the Moneyline SPAC, and if you look at the kind of Dave numbers, although the Dave multiples have actually held up quite well. And then if you look at consumer insurtech, the Lemonades and Hippos and the Metromiles, which got acquired in the world, have all been pretty significantly impacted. And I actually think each of them, I can talk about each of these sectors separately, because I think they're all a little bit different in their evolution, and it's kind of nuanced. Like, I actually think there's a lot more nuance here than people give these businesses credit for, but they still resulted, by the way, in like massive and positive outcomes for almost all, for most investors. But it's easy to look at the IPO prices and see that most of these companies are trading between 50 and 70% down from their IPO prices, which therefore has led to a major cooling across all stages. And I hear this from lots of different founders, and I hear this from founders in our own portfolio as they go out to fundraise. So I think like that's what's going on in the sector. I think my thesis on consumer investing is, again, from first principles pretty obvious that there's a whole segment of there are, like, let's take the US market alone, thousands of banks that exist. It is like mind-boggling to me that people believe that there are 4 or 5 scaled fintechs in the banking space today for that service 300 million people, and that like I hear this belief that they're like the winners have already been chosen and it's like chime, and so we're kind of done. And like maybe there are 2 or 3 other neobanks or challenger banks that like also fit into that category. So there's like the Veras and the SoFis of the world, etc. But like basically they're done. And that for me just makes no sense. There's no possibility that this is a winner take all market. There are thousands of banks. So it feels obvious to me that there are going to be a set of like digitally native fintech challenger banks that either have already been started or are going to be started in the next 5 years that are going to take advantage of modern technology and offer a significantly superior experience to the banks that exist today. And it is crazy that investors somehow believe that the sector is done, quote unquote, done. So like I have extremely strong conviction that you could be the number 2, 3, 4, 5 player and still build a multi-billion-dollar company in the consumer fintech space. I think like that feels obvious as a macro trend. And by the way, this has been totally exacerbated by COVID, where the tailwinds around not being able to literally go into your bank. And I mean, I have so many crazy experiences of having money in random locked brokerage accounts that I couldn't like reset my password because I literally couldn't physically go into the bank to do that. And I think the consumer tailwind and comfort around managing money digitally and through native or non-native, through web browsers, through apps, whatever, is very clearly picked up during COVID. Like the branch does not, the physical branch does not necessarily need to exist anymore, even though I still believe that you want to talk to a human. And so the idea that there are going to be 10 of these winners, if you fast forward 10 years from now, that are going to be digital first, I think feels really obvious. I think the question mark that everybody asks is, how do you get to that level of scale without a crazy amount of money spent on consumer acquisition, on customer acquisition, and on CACs? And I think that question, again, is like, that question I think will get answered like naturally as the infrastructure behind the infrastructure behind fintechs becomes easier to makes it easier and cheaper to actually launch a new bank. And so in order to have product parity, you can do so in a much in order to achieve product parity, you can do so more quickly and more cheaply. I feel like that feels like one trend that's happening. And if you can do that more cheaply and at feature parity with the large banks, I think that's been the major issue today, is there actually isn't great feature parity amongst a big bundle of different financial products. We're just getting there. Most of the kind of like first iteration of consumer fintechs really started either in the wealth management space, or like, i.e., if you're M1, if you're Robinhood and you've got a trading app, or they've started in crypto, or they've started in lending, instant lending, or they've started in like with banking, but with none of the other services. And I think we're seeing now this inflection point, not only of more consumers being willing to take on digital first solutions, but a rebundling to what I would describe as feature parity with some of the other, at least community banks, if not the large scaled banks. And so I think segment by segment, we're going to be able to reach feature parity for every segment in the market, and there will be several digital native winners for each segment in the market. And so that's the kind of like big macro thesis. So, and then how do you think about CAC? I feel like once you have some version, like as the macro trends move towards more digitalization, more comfort with consumers, and more consumers realizing that their existing banking solutions are not only or new banking solutions are not only have they achieved feature parity, but in some cases they actually offer significantly better experiences than the incumbents, than the Chases or the Wells today, which by the way actually have reasonable consumer experiences. I think it becomes like an obvious no-brainer that you would switch over time. And so I think these macro trends will eventually lead to like lower CACs as products become better and consumers become more consumer behavior changes to evolve to higher comfort with digital solutions.
I love that piece about feature parity. I suppose I'd always thought about opportunities in the space broadly as kind of on two vectors. You have this sort of like, product innovation piece, something like sort of the tech and FinTech. Now, to your point, if you can achieve feature parity very cheaply, the sort of threshold by which a piece of innovative software becomes an acquisition hook, that threshold gets lower, like because you're not going to have to compromise at all. So that's neat. And that's something you'll see it when people start building it. The other opportunity, and I think this goes back nicely to Retirable, is, where you have a massive TAM and basically like a wretched experience, or a almost a non-experience for a large demographic. And if you can, even if you don't have complete feature parity from day one, you can bundle services in a digitally native way to serve a need. You can get quite large. And so I'd love to maybe hear you react to that if you have a reaction there. And also get back to Retirable and the thesis there.
Yep. So Retirable for me is, again, I think the confluence of two different theses that I've already talked about, and they're like themes that I'm going to continue to pull on in my investing career, but also in this podcast, I'm sure. And the first is for Retirable. I think what makes it interesting, and for those of you who don't know, Retirable is the joint investment that Fraser and I both have in a company that really is about unlocking decumulation. So what does that mean? But helping you manage your money in the phase of your life where you may not have in the age of your life that looks kind of like retirement, and retirement looks different for different kinds of people. So it's no longer the quote unquote accumulation phase where you're earning, but you're kind of at this point, I guess, burning. And there's lots of different intricacies to doing that, to making sure that you have enough of it over time, to making sure that you're spending or taking from each of your different retirement accounts in a tax efficient way. There's lots of different pieces of it that make it actually kind of complicated. But the fundamental thesis for me was that these questions are really complicated, to the point that I was making earlier. And if you do not have a certain threshold of AUM or a certain net worth or a certain account balances, you do not get access to any advice around this. You're just not economically, you're not worth it for a large incumbent organization or an advisor really to service you, even though you probably have just as many questions. Your life is still your financial life may still be relatively complicated. But if you don't qualify, you're not going to get any financial help. And I think like that for me is demographically a massive swath of the American population that doesn't have 250,000 in assets or above to put into a retirement account that's going to qualify you to actually talk to a human. And as discussed, like, I think there's this thesis for me is around like the ability to use technology to scale what is human advice to what is like the majority of the American population that won't be able to afford it. And the thesis around like Retirable is actually stronger for me in the from a consumer fintech macro perspective, because this is today basically a completely unserved segment of the market. And so it actually looks a lot more like an emerging markets consumer fintech thesis, which is like there's just a complete absence of caring about this market. Most of the big RIAs have basically abdicated from serving this market because it isn't economically viable to do so. So the thesis around Retirable, I think, is very mission driven. If you think about the team, certainly like focused on how do you provide people a sense of how do you provide people the actual advice and the tactical wherewithal to do this, but also I think provide people with the layer of human comfort that goes alongside a major life transition. And that's also, I think, one of the big challenges of the business is establishing trust with this population, because what you're asking them to do is really trust them with your life savings, or their life savings rather, and that's not an easy bar. But to summarize, I think the thesis around Retirable just really fits into a lot of the themes that I care about, which are like serving a really underserved set of the population and providing them with a cheap and easy and efficient way to access financial services products that they don't have today, that they really should have, and to do it using technology so that there's an actual business model that makes sense. And I think it's kind of a win-win-win for the consumer and the company and like society as a whole, when people are financially like the stress, and there's all of these stats that you can also talk about, which is a corollary of this, which is the stress of managing money and like, I think it's part of a suite of one's wellness is financial wellness as well. So
I mean, but if you just talk about validating the pain point, I mean, we have cracked a way to get folks to give their life savings to a startup, and they're happy to do it. I mean, it's just a need that isn't met at all. I think we should definitely give a lot of credit to the team for the product they've built, for the way that they've been able to engage consumers. This team obviously has incredible founder market fit. You've known them for quite a bit longer than I have. So I hope you don't mind giving me a little more of the personal backstory with Retirable and with Ian specifically.
Yeah. So I've known Ian and the team for a really long time now. Ian specifically, I've known for more than a decade. We met through very close mutual friends in New York, and we always laugh because it was almost the meeting that wasn't. I had just gotten off a flight, and he had just had I think been out late the night before. It was a Sunday. We were both kind of meeting this mutual friend for a drink. I almost didn't go. The way he tells the story is he almost didn't go. And then we ended up, this mutual friend, by the way, is still an incredible friend of mine and his too. And we met I remember at this bar in the East Village with the three of us, and immediately connected over tech and like some various other topics. But I think the funny part of this story is we have since tried to find this bar And I kid you not, it is like one of those hilarious and magical moments that like doesn't really make any sense to me, because not like both of us have slightly different recollections of the night and the bar, but we have literally walked for hours in the East Village trying to find this bar that we met in originally a decade ago, or more than a decade ago now. And we're kind of, and like we always joke that like it was like maybe some alternate reality or some like alternate timeline that we accidentally met in, and like the bar for whatever reason no longer exists anymore. But yeah, Ian and I have been friends for a really long time, and I think and the story behind Retirable was when after he left Policy Genius, he went to QuadPay for a little while, which is another fintech startup. I, at the time, was at Portage and kind of had this, like, this idea specifically means a lot to me because, again, I like look at my parents and the experience of and I think many immigrants have this experience of like really wondering if your parents, like, as they approach retirement, are going to be well set up for retirement. And again, I think this is a very common kind of second generation immigrant story, which is you're almost in this weird sandwich generation of like needing to worry about your own finances and how you're doing. And I've been very lucky in my life that hasn't been as much of a factor, but then also realizing that like there are things that that your parents don't. And again, to this very mission-driven feeling that I have that I kind of, again, grew up in Canada where under a very lucky like set of circumstances in which I'm like very educated about a bunch of these decisions. And even for me, the complexity of figuring out like Social Security and how that works, and what are the tax rules around retirement, like figuring that out for my parents was a super eye-opening experience, and one that I talked pretty openly with Ian about. And that was, I think, the seed or the genesis of some of the thesis behind Retirable. And like we've had to iterate over time on like what that looks like, but that mission is like, that's the kind of personal experience of the mission that I still really think about, and that I think is one of the reasons I invested.
What's hilarious to me about this entire story is that we haven't, Tyler hasn't come into this, who, like, when you think about founder market fit, just for context, Ian Yamey is the CTO of Retirable, super, super elite operator. Tyler and the CEO was a CFP at 23, and then went to go sell consumer tech products at Policy Genius. And, his own personal story around this is, absolutely perfect for the role he's in. But it does seem like there was something in the ether around, not only, we're living in higher times. There is a mysterious bar in this kind of confluence of investors and operators is pretty fascinating.
I mean, I should say Tyler. Yeah, exactly. Tyler's background was, I also met Tyler in a bar, actually. So this is starting to become a recurring pattern, although I do know where that one is. But like Tyler, I think, has an amazing personal story that's worth digging into around how he ended up in this place. And I completely, like, I think actually it's funny because I think I met Tyler through Ian after, I mean, Ian and I go way back, as mentioned. And I think like building that kind of trust with an operator, I would have invested in whatever he did. It could have been a like coffee roll up startup, and I probably would have done it anyway. But knowing and like hearing the alignment that Tyler had in being super deep as a human advisor in the space at Northwestern, like we immediately connected on a pretty similar set of like on exactly the same set of values that I'm describing. And I think like that's ultimately, I think the founder market fit, that's like something that I look for, and I'm sure most investors do, but like that for this particular company, that mission alignment was super important. And I think it's part of the reason he wanted to start Retirable. And it was this set of like, I think it's actually a super common experience. This experience that we're describing, which is not having the set of resources available to you, whether it's for yourself personally or to your parents or for your parents on behalf of your parents. And like, it's kind of amazing that this doesn't already exist. And so I think like that alignment was really obvious from the beginning, and his personal fit within this was really obvious. But I also think it like not only was the alignment really obvious, but like the general need and pain point, the fact that the two of us had essentially the same experience separately, made me also realize that this is and like to your point around massive TAM, this is a massive issue. And so coming back to like kind of the original statement that you posited, which I think is like totally true, consumer fintech for me is all about like is like one of the ways to win is you capture a small percentage of a massive market that is completely underserved.
Be specific about, Tyler's pain point is, Tyler was a CFP advising very, very affluent customers, but he couldn't have his mother as a customer. It was actually forbidden because she didn't qualify. And when we write the story of this company, it's going to be fantastic. Are there other things in consumer, and this is maybe this is unfair because I'm sort of asking you to launch a company right now. But are there other sort of broad categories a la Retirable that you're kind of searching for that you'd like to fund that come to mind?
I mean, impossible to talk about consumer without talking about crypto in consumer, which maybe I'll start there. And I think like the general criticism I'm going to hear from people who have listened to this podcast will be, how can you possibly support crypto and be so mission and values aligned around like responsible investing and caring about the consumer when some of crypto is kind of antithetical to that. So maybe like I'll come back to that in a second. It's going to be
my follow-up question. I was about to put you on blast.
Yeah. I mean, like I'm happy to answer that question in a second. I think I'm really excited about, but like to answer your first question, like I'm really excited about consumer experiences in crypto, specifically because they are mainly built. I wouldn't say they're terrible, but they're mainly built for the enthusiast today. I think it's very obvious to me that there was a set of like 50,000 customers, and most of DeFi crypto activity is all actually centered around the same set of like 50,000 customers that are super enthusiastic about it. And I think for that number might be 50, it might be 100, but like the vast majority of individuals are not like super enthusiast technologists that understand how to, like, they're not going to want 6 different wallets to hold 6 different kinds of tokens. And they're going to want to access crypto experiences either through their existing set of technologies, existing wallets, through the banks that they already trust, through the intermediaries or fintechs that they already trust. Like that feels like a super obvious thesis that is not unique to me, but like that's an area that is today a huge potential growth area. And I think the tech underlying it hasn't been there today. And it's because like nobody knows what the quote unquote layer ones of the future. Like, I think there are some that are obviously at some scale, but there are others that there's a whole set of like nascent and emerging ecosystems today, and choosing the winner is not yet obvious. So you can't really expect there to be like there isn't one wallet to rule them all yet, because the like bridging interoperability infrastructure is not really there. Like, anyway, macro sector to your question that I'm interested in.
If you think about the
crypto.
internet, like when it started, it was a bunch of enthusiasts building websites very expensively, which you couldn't really do anything with or talk to each other. It's seems to me we're in a fairly similar space. There's more innovation, there's more capital, but
Yeah, exactly. And I think we're so early in the life cycle of this. Like, we're so early that it feels obvious that the consumer fintech experiences of the future will involve crypto. Like, that's an area that I'm spending a lot of time in now, both in how do you bridge the fintech world into crypto, which a lot, like, by the way, that has been the needle mover around cost of acquisition, has been adding crypto or DeFi products to an existing platform. Crypto also has been an incredible, like, if you look at the unit economics of crypto, it's also, you can charge a significant amount in the spread. So like the unit you can actually afford to pay more in cost of acquisition than a company who relies on a business model that is entirely interchange dependent. So you actually have this confluence of two different things, which is consumers are both retail consumers are really interested in holding crypto and participating in ecosystems, although there are no really good experiences to do so today. I think they're all kind of mediocre. So I think that's going to grow. And then you have the second thing, which is that they're actually just better businesses today. Although I think the spread that you can charge is going to compress over time, as with all financial services products. But we probably have like years to go versus interchange, which in North America is like regulators have already announced is going to compress. And then you look at Europe, where interchange is like across the region 20 bips, and you're kind of like, how do you run a business on that? You clearly need multiple products, to the point that I was making earlier around feature parity. So crypto consumer experiences are super obviously for several reasons, the next frontier of consumer fintech.
Did the light bulb for this go on for you 6 months ago, a year, 2 years? I'd love to hear about that sort of process, because I recall very vividly sort of the ICO boom, and it's very difficult to be anything other than cynical, I think, about what was happening then. And sort of thinking about this more innovative, creative, dynamic ecosystem that seems to be developing now. And how do you think about its relationship to fintech? I guess sort of the timeline of your interest.
We were interested in crypto as Portage pretty early on. We made a number of what ended up being extremely successful fund investments in the space early. I think a number of our portfolio companies, Wealthsimple being an example, launched crypto a couple of years ago. So I would say, look, Portage was formed in 2016. In 2017, 2018, it was already something that we were thinking about, at least from an investing asset class perspective. And it was obvious that it was a retail asset class. And interest was actually driven by retail investors, not by institutional investors. And so when we we were interested and thinking about crypto almost from the formation of Portage, which was actually like kind of quote unquote late in. if you think about like the first Bitcoin white paper, etc., like Bitcoin ICOs, like the ICO craze of like it was all kind of it was all already starting to hit public consciousness 6 years ago. It was not an unknown or weird foreign concept. I think what was really obvious to us was this could be an interesting risk asset class for retail investors. I think what was less obvious to me at the time was what all of the other components of Web3 around around the like sharing of economic value, which is like the incentive systems, the governance systems around DAOs, like that, all of the different other use cases of the technology that have popped up in the last 2 years were not as obvious, and their intersection to financial services was not that obvious. But I think the core use cases, which were, can you create a like digital currency or some digital form of money? The core use case of, can you remove like a centralized counterparty, i.e. the banks, from an equation to make it cheaper, and i.e. how can you use technology to provide better product that is cheaper and faster? Like, and in a world in which I've talked a little bit about like emerging market experiences that I've had already, crypto again feels like an obvious solution to a pain point, to a set of pain points around obviously there's also some issues with them. This was early in the stablecoin like maturation in that market, but how do you think about like a global currency or a currency that's not subject to like volatile inflation? These are all real problems that existed that have like predated certainly our fund and crypto, and felt like it. So I would say from the very early days, we were thinking about crypto as an asset class and specific pain points that crypto could solve in the financial services space. I think the key reason we couldn't invest directly was, I think it's because of who our LPs were at the time and just how early it was in the ecosystem. And I think that in the last year has really switched in terms of the move from retail investors to interest from institutional investors in the entire asset class. Like, I have felt since kind of the quote unquote summer of DeFi and the explosion of like NFT culture, which by the way has nothing to do with financial, like it's not completely unrelated with financial services, but I think part of what has forced this kind of like evolution has been the emergence of like NFTs in pop culture and in the like, it's obviously resonated in a very different way in society, again starting with the retail classes, but it's made it a like basically like you cannot ignore the impact of crypto and Web3 on, as reflected in the interest in like the wider societal cultural movement and trends that we're seeing now. But again, and I think this has driven a lot of institutions to not only, this has driven a lot of institutions to actually take it seriously. It started as a retail trend and now has moved, an institutional interest in it is real. And I think it's because people realize that like the retail interest in it is here to stay.
Before we get into quick fire, I did want to ask if there are, other opportunities, and we've spoken about this, I think, in the past, but other areas of the market that, especially in the context of what's happened this year, are particularly compelling to you or have changed, and people should be a little bit more cognizant of, and I guess if you can react to that.
Yeah, let's let's actually talk a little bit about some of the other sectors. So insurance is a sector that I spend a lot of time in. Many of the same attributes in insurance exist. I think the one thing that makes insurance, and you can't really generalize, but the one thing that makes insurance really hard is you can win in a couple of different ways. And I think scale in insurance actually really does matter. Matters because you have more data for underwriting. It matters also because most people don't really think about insurance. So you have like brand aware, like you buy it once a year. So brand, like unlike a bank where you're constantly using your account, and unlike investments where where you can be trading in and out, you shouldn't be, but there's other things to monitor. You're not really looking at your insurance policies once a day, more than once a year, and you make the decision once and that's it. You kind of set it and forget it. So the interaction, so the need for brand awareness and to be top of mind for a consumer is extremely important. And so it's part of the reason it's actually quite difficult to differentiate as a P&C insurer. And so marketing dollars, which come with scale, which you can advertise over a much larger customer base, actually that does matter. And so the segments that I tend to be most interested in the insurance space, I think given where the capital markets are today, I'm actually more interested in the broker models than I would have been previous to this. And I think a few years, and we've made bets and we will continue to make bets in full stack insurance carriers, in new insurance carriers. I think specifically in areas where they're either integrating new and interesting data sources or where, i.e. for risk arbitrage, and or where there's products that are like cyber that the traditional incumbents really just can't underwrite today. And so that's where I would think about either participating in holding some of that risk, so either as an MGA or as a carrier. But actually, I'm more interested in brokers than I would have been a few years ago. And the other trend and the other reason why is, so there's two reasons why. One is capital markets are not super accessible today. Again, publicly traded insurtechs have taken a massive hit. So being able to go and raise being able to go and raise additional capital to run a consumer insurtech company is going to be super difficult. So broker models are inherently less capital intensive and therefore I think more interesting today than they were several years ago. And then the second trend that I was talking about is there are clearly, so if the first trend is the capital markets are probably not going to be open, at least for this year, maybe next year as well. And it's going to be harder to raise capital for these companies. You want to be in a less capital intensive business model, which for me is the broker versus the carrier. And then the second piece of it is the carriers themselves have come a long way. And there's not only a lot more digitally native carriers with good APIs that you can integrate into as a broker, but there are also a whole set of carriers, incumbent carriers, that are now building APIs that allow the broker model to more successfully exist, where, again, 5 years ago, there were no APIs in the insurance space. So being a broker was kind of useless because you couldn't get direct quote and bind anyway. So you needed to be a carrier at that point to do anything. So it's not that I won't. So that's, I think, what has changed a little bit in the market around my insurtech thesis. I think, again, there are lots of very specific areas of risk, specialty risk, that I would still invest in either the MGA or the full stack carrier model. And then if you go to wealth management, I think I'm really spending a lot of time in one of the other beliefs that we have as a firm is that the index, direct indexing, is very clearly going to be the wealth management trend. There's two trends that we really like. One is alts, which is that I believe that a retail investor and most institutional investors are going to want their asset allocation mix to could be up to 50% in alts going forward. So the availability of different kinds of alts, of which, by the way, crypto is clearly one of them, is something that we're paying a lot of attention to. And direct indexing, which for your equities portfolio is really about creating personal portfolios. I think the ETF is kind of dead with the advent of direct indexing, which is kind of funny to say because like there's still a lot of people actually who are in mutual funds, let alone ETFs. But my view is the next iteration of that is going to be direct indexing. And then the third trend in the wealth management space that I'm spending a lot of time in is ESG, which a lot of people, I think, which I think is a controversial topic in and of itself, because I think a lot of people believe that ESG is not actually a real trend that's here to stay.
So my last question is a bit of a setup, as I suspect, or at least I hope I know the answer to this one, but what piece of content, it can be a book, YouTube video series, article, podcast, have you revisited the largest number of times?
I am going to recommend one that we've talked about before. And because I am Canadian and he is Canadian as well, I would say I've been coming back to Charles Taylor's The Malaise of Modernity of recent times. And I won't drag everybody down the communitarian rabbit hole, but as I kind of alluded to earlier in this podcast, I do think the idea of how, like, I've been kind of obsessed of late, but not only of late, in general, I think over the last 5 years, with the idea of like how our modern society has really been driven by an individualistic bent that is kind of at the core of what I would describe as many of the issues that we are dealing with politically today. And also, if you look at the mental health epidemic and
this notion of the disintermediated self from, this expectation that you're supposed to just accept that there are chemicals that are doing something wrong in your brain and just get on. Only a monster, I think, would sort of accept that as a cure for feelings of melancholy. It's just so apt right now.
Yeah, and like this, it's interesting because I had these. I actually probably didn't when did I first read this? I probably first read this I probably came to Charles Taylor, honestly, really during the pandemic. I had heard of him beforehand, but the pandemic was really, I think, a crystallization of a crystallization period that a lot of people had around what it actually means to be in some form of isolation. And I think it really reinforced, and this book was actually written in the early 90s. And so it's really prescient about quite a bit of how the world with technology has evolved. And I think it's definitely worth reading. And you can actually go online, and the CBC has free lectures, which give you a really good snapshot, but it's actually a pretty quick read. So definitely lots to talk about here. And lots to talk about around the importance for me around the importance of community, which I think is a huge, which again, I think has now again come into public consciousness post-COVID.
Yeah, I mean, his erudition is almost frightening. I would put him up there basically only with maybe John Gray in terms of living people with such a deep understanding of the history of ideas. But there are 3 lectures that he did for people that want to check it out, and you really ought to, at the Berkeley Institute at Georgetown. I think it was late aughties. But those, I think, give you a really nice synopsis of his ideas. Steph, I think I'm going to since this is actually where I wanted to go, and I think this will leave us time for future topics. I think we should probably end here, and I just want to thank you so much for getting on the show. You've definitely made me think a lot, challenged some frameworks, and I'm glad we got to riff on Professor Taylor for a bit.
Thanks for having me on, Fraser. Appreciate it.
Thanks, Steph.